monthlies that expire tomorrow. This is the monthlies that expire tomorrow. Take a look. You've got the open interest. So this is the numbers we're looking for, is these two numbers here, the volume and the open interest. If you look at the open interest, take a look at the biggest open interest we've got. Look at that. Look at the size of that volume. Do you see the number? 45 handle. 45, big 45 handle. Massive amounts of call volume and massive amounts of call open interest. Huge, huge areas. Where's the second biggest area? Where's the second biggest area? Surprisingly enough, it's this one here, 8,000 contracts, 1,900 contracts traded. 44.50, surprisingly enough, isn't it? 44.50. What price is the price that we gave out as the big level on the SPX? 44.50. It's the same as 44.38, 44.39 on the S&P futures, right? So we can already recognize that it's not the fact that that's the price. It's just the fact that we already know that these are the key areas, because we can look at it. We can find these key volumes. Where's the next biggest one? The next biggest one is right here, isn't it? There it is there, 2,900. 44.25 quarters. And then when we look at the 75 here, 44.75, you'll see that we do 1,000 contracts here and 1,000 contracts here. See how it's those basic 25-point differences. 25-point differences. Zeros, 25s, 50s, 75s, zeros. It doesn't mean there isn't big levels anywhere else. We've got quite a sizable level here, for example, in terms of total volume at 44.65, but that's okay. It's the open interest I'm more interested in. And therefore the 44.40s, the 44.30s, you'll see the volume on the fives is usually, pretty rotten, right? The volume you see on the fives is usually rotten. So we don't have those as key levels. They'll rarely ever be key levels. They'll rarely ever be key levels. Okay, so you don't really have to worry too much about the fives. They're not usually going to be something that you're paying much attention to. They're not going to get much gamma or delta hedging coming in. The levels you do need to know about are the zeros, the 25s, the 50s, the 75s, and the zeros. It's pretty obvious, pretty clear. And all you've got to do is make sure you mark off those areas on your screens. Now, as I said to Jack, and it's happened just there, is we've had a failed auction at that price. And we've managed to burst through that price now. So that's pretty obvious. We got a failed auction. We weren't able to take the market bid at 62. And for that reason, the price has just juttered through that price level, and it's pushed on through the wholesale price. The quality spread guys came in sell side just at the wrong point, and it's caused the price to drop through that key level. Now remember, there is a big unwind back above that level, so I'm actually quite excited about the fact we have gone below, because we've gone below, it's brought some selling deltas into the market. It's brought some sellers. Well, if it brings sellers into that price, I'm now going to be looking at the market from a buyer's perspective. I'm going to be looking at that seller and saying, interesting. Because obviously you can see that seller from your deltas. You can actually see the delta selling that comes in from your market deltas. And obviously when that delta selling starts tailing off a little bit, it gives you the opportunity to say, right, have I got any value to flip this back over and go after the deltas that are going to unwind above this level? So delta plus delta. So you've got a delta because of the delta on the options, and you've got a delta because of the selling deltas that came in on a sell, all going to unwind as you go back above 44.50s. Now, the value is not telling us it's going to go back above 44.50s. So we've just got to be careful with this trade. But Warren certainly still very bullish on this. Warren, you can see, hasn't really gone bearish at any stage except short term. Macro-wise, Warren likes this a lot. So I'm still a buyer, guys. I'm still a buyer of equities. I'm quite comfortable just now, but obviously we bought it here. We made some nice money. We got a higher high, but this was definitely going to present a lower low here, and it just came in at the wrong time. So we scratched out that trade for no loss. And then I started to buy back in as soon as not on the way down, but on the way back up again, I started to buy back into this phase here. So I was just a buyer just coming back off the lows here, trying to capture that little bit of business here. And hopefully we can hold on to it. Hopefully it makes some nice money. But I'm a buyer back in at 40, 44.35 just now. 44.35 on the S&P futures is my buy price just now. So well done anybody that beat my price on this one. 35.25. So Mike beat my price. So well done, Mike. Far better trade than I got. But we were right about bonds. Remember I told you about the bond price going higher. This is what happened, guys. Look at what happened. We told you during this candle here that the bond price would be trading higher. Look at what happened. It's beautiful, isn't it? And I knew that that was going to happen with an incredibly high probability because of what was happening with the inflation. So we can already tell just how powerful that piece of information can be. We'll touch on this in class if anybody doesn't know about inflation break-evens. Do we have to touch on it, or is everybody aware of inflation break-evens, guys? Does everybody know about it? It's one of those subjects that we've touched on in depth more a while ago, but we haven't really bothered with it recently. It's just a line now for most people.